Hello, Jodi. Hello, Chuck. Hello, Frank.
Hi, Diego.
Oh, hey, Diego.
How are you?
Great.
Great, excited.
Yeah, this is going to be a really good conversation. The previous two sessions have been very lively and engaging, I think, and I expect the same from this one. So I'll do a brief intro, and then we'll just jump right in because the time is going to fly, and we're going to be at the end before we know it. So joining me today on this panel is Jodi Hall, and she's president of Nationwide Mortgage Bankers. I have Frank Fuentes, producing branch manager at New American Funding, and Chuck Iverson, president of Mason McDuffie Mortgage. Welcome.
Thank you.
Thank you for having us.
Yeah.
It's really my pleasure. So I'm going to start with Jodi with our first question. So all of you on this panel are with IMBs, independent mortgage banks. What can an IMB do when it comes to moving the needle on affordable housing?
Well, it does seem like we have very little control over affordable housing. We cannot impact the inventory that is available. We can't impact the home starts and the builder red tape and incentivizing builders to have more home starts. But the things that we can control, I think, largely are around, and we can't really control interest rates, but in a way we do have an impact on the rates that we offer our borrowers. I always like to keep these conversations extremely positive because we hear so much doom and gloom in the industry. And, from a housing inventory perspective, we are starting to see that there's a little more inventory. It was in headlines, but it's still the second lowest housing inventory that there's ever been. So that's a little bit alarming. But from a rate perspective, we have seen a little bit of relief. And with a $450,000 home in October with 25% down, we see about a $250 a month payment savings with where interest rates are today. So on the bright side, interest rates are coming down for the consumers, and things that play into those interest rates that lenders can impact is largely the cost of doing business. So we saw that a single loan rose to $11,000 on average, which was the lender's cost to originate, and that gets passed on to the consumer. So we as lenders have to be extremely strategic in vetting vendors and the resources that we use in producing loans to try to keep those costs down. Our challenges have been furthered by the aggressive increase from FICO for credit scoring models, and also the aggressive increase of verification of employment that we have seen over the last 2 years by those who you could argue have a monopoly on the industry, although we are starting to see more people in that space. So what we can do as lenders is to try to drive down costs by implementing technology that helps things move through the system much faster to decrease cost, really having those hard conversations with our vendors to decrease the cost that goes over to a consumer. And then the other thing that we have to be diligent about, I won't say the lender comp because I need to be able to recruit and bring LOs on board. And I think that a significant amount of the cost to originate a loan isn't necessarily to the loan officer. It's in redundancy, waste, and compliance, and all of the external costs. But the other thing that we can do for affordable lending is education. And really educating not just the home buyers, but educating our referral partners on programs and platforms that are available to help people get into homes and really fight the good fight every day to provide that training and education to our consumers and to our referral partners. And product. The more product we know, the more we can educate our loan officers to be able to educate their referral partners, the better off we're going to be in helping assist home buyers who otherwise wouldn't qualify for loans get into mortgages.
Really interesting perspective on reducing costs and the technology burden, and then passing on those savings to consumers. Chuck, I'd love for you to just kind of riff on that and how that's going at your bank.
Well, first, I love Jodi's focus, and you can just tell she's a can-do person. And I think that's the important question: is what can we do, not what are all the challenges. I mean, sometimes problem identification is the way forward, but we have a lot of tools and resources available to us. So I just embrace her approach on that, and I think that's really, really important. I will also just say that Jodi made me think a lot about the value of IMBs in this distribution chain. And we'll get into that a little bit later, mainly around the products that we all embrace. In terms of costs, I think was the question for me. I mean, that's really a difficult one. There's really no magic formula for us. I think our approach is really, we have to go out and compete, and the price is the price. We do surveys, and so we have to do that because I think we're talking about getting a lower cost to the consumer. So competition is really the way forward, and that forces compression and it forces innovation inside. And so there's, it probably looks a lot better on the outside than it does on the inside of a mortgage banking firm, right? At this point in time, for sure. So, but we're all trying to tackle that, but it's mind-boggling to me how, with all the implementation of technology, all the things the agencies have done, how much more labor it takes to do a loan right now. It's just really, if you look for 20 years back, it costs more and is way more complex to manufacture a loan than it was then. So, but the quality of data is much better, and of course, that's important in the whole chain.
Absolutely. And just want to remind the audience that you can ask a question of our esteemed panelists by clicking on the Q&A button, or just dropping your question into the chat box by clicking the chat button. And I'm happy to go off-road and answer audience questions with our panelists in real time. So please take advantage of that. Frank, I wanted to ask you about underserved communities, minority communities, and what we can do in those areas to expand reach and increase affordability.
Absolutely, my pleasure. Where do I start? One of our sayings or mottos here at New American Funding is mirror the communities we serve. Right. In my experience and the success we've had here at New American Funding within this space, it really all points back to that. Is by really having the individuals, whether it's operations staff, underwriters, loan officer assistants, and obviously loan officers that are from the market that are dealing with those consumers directly. So that's number one. Now, it's easier said than done, right? Because that's probably one of the toughest challenges in our business is recruiting that talent. Where do you find it, right? So the way you start, and again, everything I'm going to talk about here is based on my personal experience and success here at New American Funding within the space. So as far as expanding market reach, number one, you need to create internal and external initiatives. Okay, and those initiatives have to work together. That's a common mistake that I see at some of our peers in the industry, where they'll create these employee resource groups internally for these type of initiatives, but there's no connection to sales. There's no external component to it. So it's very important to mesh the two and make sure there's collaboration within those initiatives. A couple of examples of that are the Latino Focus Initiative here at New American Funding, which I personally spearheaded for the last 7 years, working hand in hand with the president of our company, Patty Arviello, mentor and coach of mine for 20 years. That was our first true initiative here at New American Funding. That was bad. We established that in 2013. Fast forward to 2016, we then started the DREAM Initiative to, same thing, increase the Black home ownership across America. But it all started with an internal conference call that evolved into grassroots events, partnerships with minority trade organizations, and it basically just blew up. But it started from a simple conference call internally among underwriters, branch managers, loan officers, and marketing individuals. We basically brought in department heads from every single department of the company and just brainstormed as to what was needed within these spaces. So that's super important. Once you have that established, then you need to get out there, get into the market. Create those partnerships with organizations such as NAREP, the National Association of Hispanic Real Estate Professionals, has been instrumental with our Latino Focus initiative. We've partnered with them for almost 10 years at the highest level, but not only partner with them, but truly engage. That's another mistake that I see big banks and independent mortgage bankers making in that space. They basically just write the check on a yearly basis, but never show up to the events, or they'll send one of their executives and that's it. And it seems like they're just checking off a box on whatever list they have or requirements they have, but that's it. There's really no engagement. So you really need to get involved and engage, get your loan officers involved in these organizations. And that's one of the basics you need to do. Number two is your marketing collateral. Okay, that marketing collateral for example, the Latino Focus initiatives that you may be working on. It's super important to be very culturally keen in the development of these materials, whether they're flyers, brochures, PowerPoints, videos, social media content, and understand that within the Hispanic umbrella, there's a large variety of different Hispanics, ultimately meaning that the outreach, the messaging has to change. It will be different to Hispanics in Florida versus Hispanics in Texas, Southern California, the Bay Area. Believe it or not, there are subsets of Hispanics in this country, and it's very important if you want to be effective and make a difference to truly be culturally keen in your messaging. Okay, I could go on and on and on about that, but I think I'll stop at this point.
Yeah, no, that's great. And I'd love to hear how that resonates with Chuck and Jodi. Our efforts underway in your organizations to take advantage of those insights and roll out similar programs.
So I would like to start with that one because I'm sitting here smiling because I like that Frank said it started with an internal initiative that was taken and included the external initiative. For Nationwide Mortgage Bankers, it happened the opposite way. It was an external initiative that started in 2019, and we have a DBA AmeriCasa that focuses on the Hispanic communities, and we brought branches to Nationwide Mortgage Bankers specifically to be in their communities and be able to market AmeriCasa. We're playing catch up now, even from 2019, to get our internal marketing and education and training into the hands of our branches who have been marketing that way. So I wish I would have met Frank a long time ago. We could have had a conversation 2 years ago, would have saved a lot of do and learn. The other thing that I think that is important to Frank's point, it's the passion and perseverance. I think there are a lot of lenders out there who have the vision, they want to do something, but it's a flash in the pan, right? Like if it's not immediate gratification where you see that you're, being rewarded for your efforts and you're getting buy-in to the community, then they just dissipate. So it does take a organization that has a number of passionate individuals who are willing to do the work as Frank is doing to bring that vision to fruition. And there unfortunately are a lot of people that don't have that. And it's like, maybe they should focus their attention to areas that they are more passionate about, because I think that there are other segments that mortgage lenders, independent mortgage bankers already have individuals in communities that they could focus on. When we did the prep call for this panel, I think one of the most underserved communities in the United States is a rural community. And, you know, if you are there and you are passionate about the rural community and how underserved it is with lending, because they just have, you know, local credit unions and, you know, farmers and merchants banks that are there, and they can only get 80% loan to value, have to have a very high FICO score, so they don't have access to the lending. So I think that there are other areas that different IMBs can focus on that can serve a broader community. And we need to have those conversations and get with other IMBs and collaborate with ideas on areas that people are passionate about and that they can persevere. So it isn't just that I want this instant hit, I'm in and I'm out.
Yeah, Frank talked about the Latino communities. I think that's a good point, that there are lots of different segments within that overall umbrella of a community. NARP is a good organization to shout out. Their professionals become much more than just housing advisors. They become trusted financial advisors in those communities across the spectrum of wealth building. So incredibly important to embed in those communities, like Jodi, like you talked about. Chuck, Frank talked about the Latino community. Jodi talked about the rural community. Are there communities that Mason McDuffie is looking at and trying to serve better?
Yeah, not specific to the underserved communities. I am on the California Mortgage Bankers Affordable Housing Committee, and we're looking at a lot of different broad segments in that. I would just say, no doubt there's a certain high level of importance on underserved communities, but really affordable housing. I just look at all the young people out there that with the run up in housing prices, it's just a challenge for them to consider a future that has home ownership in it. And you see initiatives like micro housing and fragmented housing ownership and different things where people just are envisioning a future of unaffordability. And so I think actions speak louder than words, and that's why I'm just so humbled really to be here with Jodi and Frank, because they've done that. I think so just to segment a little bit back to the underserved communities and affordable housing in general, it comes down to a true focus. And I feel like we have a long ways to go in creating that focus, because there's so many tools out there. We mentioned NAREP, but there's NAMBA. So there's organizations, both of the agencies are willing to help to educate the communities. Obviously, the major depositories that we partner with all have initiatives. So you have these resources available to you. But to Frank's point, you got to get it all the way through the supply chain and out into education in the communities. And I think Jodi brought up another vital point of educating the real estate agents. So for us, I'll just go back to the CMBA. When we looked at what can we do right now for the CMBA, like we know we need to advocate and we know we need to impact housing policy. But what can we do today? And it really comes down educating all the communities, not taking for granted that our loan officers really know everything that's out there. Certainly educating the real estate community and then getting into the community themselves. So we're developing those resources out. And then the last thing I would say, implement. And this is something, again, from our prep meeting that Jodi brought up. I mean, I guess to get a little bit on the pro IMB bandwagon, we're out there with every housing finance agency. So all the states that we're in that we have active originations on, the first thing we do is we engage with the HFA in that area. And that's part of the value we bring to our loan officer community, but it's also how we really promote affordable lending, because you have to use every single tool, USDA, FHA, VA, housing finance, the agency products that are available, and then really put people on a path to home ownership. And then the last thing I'd say about the education initiative, because there's a lot of discussion around bias. But I think the biggest thing we can do around bias is educate, because an informed consumer is a powerful consumer.
So we've brought up NARUP and NAMBA. I think both of those organizations do a really good job of helping people understand and move beyond just the mindset of doing good, but into the mindset of doing well by doing good, like being a profitable organization by doing good. So Frank, I'd love to start with you. What's the business opportunity here with working with underserved communities? Why should people who are thinking about profitability care about this?
Sure. Well, it's a tremendous opportunity. It's huge. It's an opportunity that, again, here at New American Funding, we identified a long time ago and have done very well within the space. Currently, there's over 63 million Hispanics in America. It's about 19% of the U.S. population, just specifically focusing on Latinos, U.S. Latinos. I mean, if the U.S. Latinos were a standalone country, they would account for the 5th largest GDP in the world. It's huge. Over 20% of all 75 million millennials in the country are of Hispanic origin. So within the Hispanic space, I mean, it's just a huge opportunity for us to, like it's been said here by Chuck and by Jodi, to educate. But the real question here, we all talk about education. I've also been in roundtable discussions at the NBA, at the FHFA, at Fannie and Freddie, all the different agencies. We all talk about education, but at the end, it comes out to, okay, so how? What's the how? How do you get it out there, right? And I think in this day and age, what's very important is you're creating that collateral, that marketing collateral, those pieces, and get away from what you were doing even 5 years ago or 7 years ago. You need to constantly be on top of the trends. Nowadays, it's social media, it's video. If you do a lot of the research on reaching Hispanic millennials, they're the number one users of video. They consume the most minutes per month of video. They're the highest consumers of YouTube. So as you're thinking about your initiatives, your external initiatives, whether they're for talent acquisition or for prospective consumers, you need to be thinking about those channels and really truly understand them and be a dominant force within those channels. So that's very important. The partnerships that I talked about earlier, in order to work and really capitalize on this opportunity, you need to engage with partners that were mentioned, with like NAREP, NAMBA, NAREP, and also the agencies. That's another secret to our success. We partnered up with Freddie Mac a long time ago on our Latino Focus and Dream initiatives. Okay, they've got a whole team of individuals dedicated to affordable lending. There's resources there. So any independent mortgage banker can make that call, reach out to the affordable lending team and create those partnerships. And then once you have those partnerships, you can go out and create business relationships with big real estate companies who, guess what? They also have their affordable lending. I know Keller Williams just came out with theirs a couple of years ago. I helped them launch it. EXP, they've got EXP Latino. So there's a huge opportunity there that has to be untapped. And it is. We are going in the right direction, but it's just tremendous. It's huge.
All right. So Chuck, there's been a lot of positivity on this panel, which I love. I think that's the right way to approach it. But the numbers are daunting, right? I mean, the home prices have gone up 40 to 50% over the past couple of years. Rates have more than doubled. They've now come back to be about double where they were at the bottom of mortgage rates. Inventory continues to be a big challenge. We're flirting with all-time lows in inventory, seemingly month after month. so those numbers are daunting. What are you and your company doing to overcome those obstacles of the housing market?
Well, to be frank, I mean, most of that's out of our control, and that's part of what Jodi talked about. But I do have faith that things, that cycles come and go. We've seen that, and that things do come back into equilibrium. I think the biggest thing for us is really at the executive level. I'm involved in advocacy because I think that's important. I want to compliment this Mini-Con because you tackled kind of three important areas. One is the formation of policy, and where that comes from, and that's through education and studies and those things that informs public policy. But then we have to get after public policy, have bipartisan support, help the agencies understand where they're effective and where they're not effective, and all those things that the MBA and the state state associations really help. But for us, it's just really supporting our loan officers. Most of the loan officers want to go out. It's a purchase market now. To Frank's point, first time all the demographics show that first time home buyers are going to drive this market, and so that's young people, that's underserved communities, and so we have to have products that they need. We have to inspire a belief in those communities that they can achieve home ownership with work, because you do have to prepare yourself to be a homeowner and to be a responsible homeowner. So for us, it's really getting after those products and educating our communities. And I think this has been kind of a kick in the butt for me, really, with my colleagues here and hearing what they've been able to do and realizing the level of focus and passion that it takes to take action and not just have words.
Let's stick with first-time home buyers for a moment, because we're in the strongest demographic patch for first-time home buyer demand ever, right? 2020 to 2024, there's more people reaching home buying age than we've ever seen in our nation's history. So that's a huge opportunity, right? But the supply, may not be there. And I think it is a lot about education. So I'd love to talk with Jodi and Frank and you, Chuck, a little bit more about first-time home buyers and what we can do to help them achieve that dream of home ownership. And Jodi, I'll start with you.
Yeah, thanks for the question, because I was going to kind of bounce off of, Chuck, it's so much education. Like, how many people know that they can get into a home with a down payment assistance program with little,
very few.
with very little money out of pocket. And I think that that's where it's important for how do we reach first-time home buyers to get them that knowledge. And a lot of it is we're going to say is through marketing, because that's how people are interacting today. And it's also with referral partners. It's amazing to me how many realtors don't know that there are programs available for very little money down. And I think it's educating them through alternative types. Last year we saw home buyers would not look at offers that said FHA or VA. It was either a cash offer or it was a conventional without contingency contracts that were being accepted. So I think that also that our referral partners or realtors also have a service to their communities to educate the seller on, that it's a stigma that an FHA loan takes longer than a conventional loan, because in this day and age, it just really doesn't. It's that, is 100% VA financing worse than an 80% conventional loan? It's not. And I don't think that education has occurred across the entire industry and the market. So it's education at many different levels. It's very difficult to be able to do and to give people access process. And I think that really is, that's where we arm our loan officers as trusted advisors, not just to the clients, but also to their referral partners, and get marketing out there for referral partners to be able to assist in educating the sellers and the home buyers to further dip into the first-time home buyer market and show people that it's not as hard as you think it is to get a mortgage or to have access to lending that doesn't require 20% down.
Frank, first-time home buyers, millennials, Gen Z, how are you reaching out?
Yeah, so what I want to say about that, I think right now is a really good coaching moment for all of our loan officers that are out there, because we still see, or at least I still see it in my market, a lot of loan officers who are still kind of in that remote world, right? They want to work remote, they want to do this. It's time to get out. It's time to get out, do the grassroots events, do the partnerships. Like I said, I love those partnerships with nonprofits, with your local churches, with non-traditional business partners, right? A lot of loan officers don't like to work with realtors. Okay, work with attorneys, work with CPAs, financial planners. There's all kinds of non-traditional business partners, first-time buyer fairs. So I guess the point here is get out there, start doing some of the basics that have worked for years, even in this social media world that we live in. But you'd be amazed as to what happens when you get out there belly to belly, face to face with clients, even if they're millennials, and provide that education via a grassroots approach.
Yeah, I love it.
That's just a quick comment. You know, I hate these extreme market cycles, and we just went through one that impacted, you know, both key parts of this distribution channel. First, realtors, because of all the cash offers and bidding wars and all that. You know, there was probably a 2 to 3, 4 year period where there wasn't a hunger for education, but that's shifted quickly. They want education. They want to know how to pivot in this marketplace. But the loan officers, to Frank's point, had the same exact thing, you know, obviously with refinances and a robust purchase market. You know, I think that it distorted their behaviors. And so we've got to quickly come together, you know, with our loan officer and our referral partners to get out and embrace the communities. And when I hear LOs that don't want to work with or don't like to work with real estate firms, I'll just tell you it shouldn't be any of my loan officers, because you're in the wrong place. Because that's how we get this together as a partnership with our real estate partners.
Yeah, absolutely, and particularly with the Hispanic community, the realtor is a key person. They may be the key person when it comes to wealth building. So it's definitely want to change that perspective if you're somebody that doesn't want to work with realtors. So we have an audience question that circles back on cost cutting, but I want to kind of tie everything together a little bit too. These cycles are really tough, and the cycles make it really tough for organizations to think about doing well by doing good, because they're just so focused on what's right in front of them and putting out the fires. I do think that there's an opportunity in technology to avoid some of the boom and bust that we see, particularly on the mortgage lending side. So, Jodi, this question was for you, but anyone can weigh in on this, and this will probably be our final word. You talked about technology and being able to do cost reductions and passing those savings on. Are you seeing anything new that can address the painful process of manufacturing a mortgage, or is it the same old, same old?
No, I think there's a lot of new out there, and just as competition will help decrease costs. So first of all, just from a verification of employment, because I've been ranting on one of the biggest providers of verification of employment and their increasing cost. There is competition out there. Truve most recently is a company that's coming into the space along with there is also a Experian Verify that is coming out that some of the credit providers are offering. So it's a matter of collaborating and getting together on what your cascade waterfall effect is going to be for your verifications of employment. But there's more and more competition around verification of employment and automation and being able to get direct at data so that you can put that data directly into calculations without having to fat finger type or have OCR technology to scrape the data. We see that also in the appraisal space and getting direct access to data. Also, credit vendors, you're in a negotiation and there are credit vendors out there that want to gain market share. And it's a daunting task to have to go through and look at all of the available resources to drive down costs. But from a technology perspective, we have been working on a workflow automation. It's a task-based parallel workflow that we've not had access to in the past from a technology perspective, which will give us the opportunity to expand with the market. So, when we have a 2021 that we don't have to double our staff when everybody's trying to double employee count, and will greatly decrease the touch of the interaction. So more to come around that in the not too distant future, but there's a lot of, and it takes a lot of vetting to be able to find the right partners in the right space who share your same passion and your same initiatives in mortgage lending, but they are out there. You just have to look and you have to talk and collaborate with everybody else in the IMB space. I'm happy to do so if you want to reach out to me personally to discuss that further.
All right, that will be the final word for today. Thank you
guys.
so much to all three of you. Yeah, this is a great conversation, and we'll have a part two for sure. There's a lot of topics and themes that have come up that we just need to dive more deeply on in a future virtual event. I appreciate all three of you very much. Have a great rest of your day. Thank you.
Thank you very much.
Thank you so much.
Appreciate it.
Have a great day.